Circle aced its first earnings test, up 6.73%. This is Tuesday, the 12th of August, 2025, pre-market session. The stock has been in an uptrend since Thursday, the 7th of August, after, or rather, yes, ending the downtrend that began, if you like, as of the 18th of July. Yeah, 18th of July. So as things stand right now, we have on this 4-hour chart a couple of projections. Let's see what we have. No new rejections on the chart over there. We have 169.50. It's a downward projection. 169.50 currently in play. But before now, we had downward projections at as low as 98.15, 108.61, 125.56, 161.67, 166.51, 169.50. But you know very well that the stock has, you know, has gained up to 420% since it debuted in early June. As such, we have projections that the algos believe it has the potential to test 3.30 sorry 322.95, 303.99, 273.28, 209.32. Let's just quickly have a look at its 1 hour chart. Okay, there's a slight rejection here. That's why this loss is no longer what it was before. It's now 6.66. We have, sorry, that's this gain, not a loss. Gain is now 6.66. So we have this 1 hour chart has an extrapolation. The other charts don't have yet. The other hourly charts don't have, and include the daily chart as well. So it's saying that strength is going to remain in place just an hour and a half before the market opens for today's trading session, and then after that we might go into a retracement up till Wednesday's pre-market session, and then we might get a bounce thereafter. But this is an extrapolation that goes covers one whole day. There's a good chance that all of this may not pan out. Let's see what we have in terms of projections. We have already seen 322, but we're just going to see what is here anyway. 175.27, 175.24, 172.32, 167.77. And let's come back to the 4 hour chart to get the uh, price pressure indications. Okay, we have here it's strongly bullish. All the 10 and 21 period moving averages are are in strong trend modes. However, we still have negative derivatives, two on the 21 period moving average and one on the 10 period moving average, and they're not small, they're all robust, indicating that the stock is not out of the woods yet. However, because the stock is already in strong trend modes based on its 10 and its the price pressure momentums on its 10 and 21 period, 10 and 21, the 10 and 21 period moving averages are in strong trend modes. uh, Institutions and funds have already, the ones that are the active ones, they must, and the ones that are interested in the stock must have come back into the stock, because they usually come back when they exit, when it's decaying, when there's a rollover occurring. They exit to get involved in other things, but they come back when the trend mode, especially on the 21 period moving average, reaches 0.25 or higher. So the stock has, since this is already 10x that 0.25, almost 10x. So they're already in now, and hopefully they might hang around for a couple of days if things remain equal. If these upward projections are anything to rely on. So the earnings, as I indicated earlier on, are out. Let's just listen to what the readout here is saying.
CRCL, turning U.S. Treasuries into a digital yield machine. Number 1. From Treasuries to tokenization, a century-long cycle evolves. For over a century, U.S. Treasuries have been the ultimate trust instrument, serving as the safest, most liquid debt instrument on the planet. Now, through USDC, Circle has effectively digitized treasuries, wrapping them in a stablecoin framework that operates 24/7 on blockchain rails. Revenue engine. Circle earns net interest income from the reserves backing USDC, which are predominantly short term treasuries. With rates still elevated, these reserves are throwing off substantial yield, creating an earnings tailwind even before we factor in USDC adoption growth. In essence, owning CRCL is owning a fintech that monetizes US debt in real time, distributing its utility globally through a tokenized wrapper. Number two, the Genius Act, Catalyst and Curveball. The Genius Act, recently passed in Washington, is the most significant piece of U.S. stablecoin legislation to date. It offers much needed regulatory clarity, making it easier for institutions, fintechs, and even global merchants to integrate stablecoins into their payment and settlement flows. Bullish case. For optimists like Seaport Research's Jeff Cantwell, the Genius Act is a watershed moment that will unlock substantial new use cases in payments, capital markets, and tokenized assets. Circle's first mover advantage and reputation as a compliant issuer could secure it the largest share of this growth. Bearish case. Critics like Mizuho's Dan Dolev see the same act as a moat thinner, enabling fintech giants like PayPal, Walmart, and Amazon to launch competing stablecoins, potentially squeezing Circle's margins. Number three, earnings. Strong growth, IPO charges, and profit ahead. Circle's first public earnings report, Q2, delivered revenue 658 million plus 53% year over year, beating 646 million consensus. EBITDA 126 million, beating 119 million forecast. Net loss 482 million, expected IPO related. With interest income on reserves driving profitability, analysts expect positive net income in Q3 and Q4, a major milestone for a crypto native company. Number four, competitive dynamics from monopoly to market battle. Until now, Circle's main regulated competitor was Tether, which operates largely outside U.S. oversight. The Genius Act could change that, enabling regulated entrants from Wall Street and Silicon Valley to compete head on. Potential challengers: fintechs, PayPal, PUSD stablecoin already launched. Big tech, Amazon, Apple, and Google with payment integration potential. Banks, JP Morgan, Citi, and others who may want their own tokenized dollar products. If these entrants move aggressively, Circle's share of the stablecoin float could shrink, even if the total market grows. Number five, macro tailwinds. Debt as a utility, stablecoins as infrastructure. One overlooked fact: 70% of U.S. Treasury interest payments stay domestic, flowing back into banks, corporations, and individuals. Now, stablecoin issuers like Circle are part of that loop, capturing a slice of sovereign interest income and redistributing it through digital markets. Stablecoins are no longer just a crypto trading tool, they are becoming a programmable form of sovereign debt. This means CRCL is a proxy for tokenized US Treasuries. Its revenue stream is tied to one of the most stable and creditworthy income sources in the world. Number six, valuation and street sentiment. Consensus price target 189, approximately 17% upside from 161.39. Rating split 7 buy, 5 hold, 4 sell. Valuation concern: trading at 80 estimated 2026 EBITDA, a high bar for execution. Investor takeaway: CRCL isn't just another crypto stock. It's the first pure play public stablecoin issuer monetizing US Treasuries through a blockchain based settlement layer. If you believe stablecoins will become a core part of global finance, regulatory clarity will accelerate adoption rather than dilute margins, and interest income on tokenized reserves remains strong, then CRCL could be the MSTR of the digital dollar era, a high beta bet on the US dollar's evolution into a programmable 24/7 asset. But if competition floods in and compresses margins, the post IPO rally could prove a cyclical spike rather than a secular trend.
Okay, thank you very much for watching this video.